Accounting for fixed assets. This is our topic, and in this module, we will learn what are the different depreciation methods and how to calculate depreciation rate. It will be very interesting, but the only thing is your full concentration is required. We have already discussed the basic concept of depreciation, where we discussed that depreciation is a systematic allocation of the cost of asset or fixed asset over its useful life. When we are saying systematic allocation, it means there is some system to follow. So this is what we will be discussing in this module. So there are different methods which we will discuss, which are followed for depreciating a fixed asset. First one is straight line method. Then comes reducing balance method, which is also known as declining balance method. And sum of years digit method. Then comes number of units output or produced method. And then number of service hours method. Why there are different methods? Question arises. The answer is that depreciation of a fixed asset is always calculated based on the pattern of economic benefit associated to the asset. And whenever the pattern of economic benefit will be changed, the depreciation method will be changed. For example, if we see furniture is a fixed asset and its pattern of economic benefit towards the entity remains same over its useful life regardless of its repair and maintenance thing. Means we don't need much repair and maintenance expenditure to obtain its economic benefits for the entity. Whereas, if we take an example of automobile, it is also a fixed asset. But in order to maintain its economic benefits equal over its useful life, we need its maintenance or repairs or upkeeping of the asset. If we will not upkeep the asset, or if we will not keep its repair and maintenance thing, then what will happen? That this automobile will not provide us economic benefit equivalent to the economic benefit that we had in the previous year. So in a way, we will say that in the subsequent years, automobile will provide us economic benefit equal to the previous year because of two elements. One is the repair and maintenance cost, and the second one is the cost of the asset. Therefore, the economic benefit associated to the cost of asset will be taken as reduced over the year. So for this, we will use reducing balance method, and for furniture, we will use straight line method because their repair and maintenance is not required to that much as we require for automobile. And there are few machineries or plants. We use those machineries or plants for production of a specific number of units. And beyond that number of units, those plant and machineries will not be useful. So their useful life is limited to the number or the hours of their usage. So the depreciation will be calculated based on the number of units output or number of service hours that the plant and machinery would be used. So their economic benefit or their pattern of economic benefit is depending upon the number of units what we are getting from that, or the number of service hours that plant and machinery is working. And then there is a method which is sum of years digit method. In this method, we see there is a proportionate decline in the pattern of economic benefit. So if an asset is proportionately declining its usefulness, then we will use sum of years digit method. Let's see a few practical question in which we will see that how these are calculated. So there is a practice question that machine bought on 1st of January 2000 X9 for rupees 80,000. Its residual value is estimated rupees 2,000 with 4-year useful life, and it can work for 12,000 hours in total and can produce 40,000 units in total as per the estimate given by the experts. And we know very well that estimates are always given by the experts. So following are its actual results in 2009 and 2000 Y0. So in the year 2009, service hours were 2,000 and number of units produced were 7,000. And in the year Y0, service hours are 5,000 and number of units produced are 15,000. So the important information is the cost, its residual value, useful life in terms of number of years, useful life in terms of number of hours, useful life in terms of number of units. And these are the 2 years out of these 4 for which we will be calculating depreciation. And these are the hours in these 2 years out of these 12,000 for which we will be calculating depreciation. And these are the number of units produced in these 2 years out of these 40,000 number of units for which we will be calculating depreciation. So the depreciation method that we will be using includes straight line, reducing balance, service hour method, units produced or units output method, sum of years digit method. Let's see how to calculate depreciation under the straight line method. So for calculating depreciation under straight line method, we have to work out the depreciable amount. And we know very well that cost of asset minus residual value gives us depreciable amount. The formula is depreciable amount divided by useful life. Depreciable amount is 78,000 coming from here. And useful life is 4 years. So the depreciation expense for 1 year is 19,500. Same will be the depreciation expense for the year Y0. We can calculate this 25% as well. So the formula for calculating depreciation rate is 1 divided by useful life times 100. So 1 divided by useful life is 4 times 100 gives you 25%. So this is how we calculate percentage. 1 divided by useful life times 100 gives us 25%. Well, so the next formula for reducing balance method in order to calculate its depreciation rate is 1 minus n. N is the useful life. 1 minus n. N is the useful life. Residual value divided by cost. residual value is 2000 and cost is 80,000, then we will take its square root, whole multiplied by 100. This gives us 60% depreciation rate. And remember, for applying this depreciation rate, for the first year, we will use cost of the asset. Here, we will not use the depreciable amount. Remember, this is important tip. And then, for the next year, what we will do, the depreciation for this 2000 X9 will be subtracted from the cost to calculate net book value. Here we will show it's working. It is 32,000. And in the second year, the depreciation rate, the same rate, 60% will be applied on the net book value. Yes, this is known as net book value. Okay. So this method is also known as net book value method, and this is also known as WDV, written down value. We can name it written down value method, net book value method, reducing balance method, diminishing balance method, declining balance method. So this is the same. The main concept is how to calculate its rate and how to apply its rate. Its rate is always applied on net book value in the subsequent years and on cost in the first year. Well, service hour method. For service hour method, the formula is depreciable amount divided by total estimated hours. It will give us depreciation rate per hour. And then this will be applied on the number of hours that we worked for. So, depreciable amount we have already calculated. That is 78,000, and this is the total estimated hours which is given in the question. Just see, 12,000. Okay, so we will take this 12,000. 6.5 per hour is depreciation rate per hour. Apply this on the number of hours that we worked for, which is 2,000 and 5,000. And after applying this rate, we get this 13,000 for year X9 and 32,500 for the year Y0. And now the next method, units output or production method. Formula is almost the same, depreciable amount divided by, here we had total estimated hours, and here we will be dividing it by total estimated output. So we will get depreciation rate per unit, okay, like this. Our estimated output for this asset is 40,000 as given in the question. We have already discussed. 1.95 per unit is the depreciation rate. We will multiply it with the actual number of units produced given in the question. Here we go. Okay. And this is our depreciation expense for the year X9 and Y0. And now comes sum of years digit method. What do? We simply make a sum of the number of years. 1, 2, 3, 4. X9, Y0, Y1, Y2. There, it's 4 years useful life asset. The sum of this 1, 2, 3, 4 is 10. Okay? 10. For the first year, the depreciable amount will be multiplied by 4 and divided by 10. This is its depreciation for the first year. Second year, third year, fourth year. So, proportionately, its depreciation expense will be reduced. So, it is known as sum of years digit method, in which we see there is a proportionate decline in the amount of depreciation. So, the important tips to remember in this module are that selection of depreciation method depends upon the pattern of economic benefit associated to the asset, which would be different, as we discussed. And the second thing is, except for the reducing balance method, in all other methods, we calculate depreciation by using depreciable amount. So depreciable amount is to be calculated firstly in all the depreciation methods except in reducing balance method. We have already practiced it. Please do practice more for your perfection. Thank you.